Based on the historical data and forecast, Bitcoin shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for price movement. Considering the support at 83,800 and resistance at 95600, I recommend a long position strategy. The entry price will be $86,000, coinciding with the forecast price for March 26, 2025. The stop loss will be set at $85,500, just below the lower Bollinger Band, to protect against unexpected downturns. The initial target price will be $87,000, aiming for a quick profit while respecting the current trend. To maximize potential returns, I suggest a dynamic target price adjustment. If the price reaches $87,000, move the stop loss to the entry price of $86,000, effectively locking in profits. Continue holding the position, adjusting the stop loss upwards as the price increases, aiming for the resistance level of $95,600. If the RSI approaches 80, consider taking partial profits and re-evaluating the position. This strategy combines trend following with volatility management and risk mitigation, offering a balanced approach to capitalize on the potential upside while limiting downside exposure. Based on the historical data and forecast, Bitcoin Cash exhibits a slight upward trend, bouncing between the support of $331 and the resistance of $345. The RSI fluctuates around the 45 to 52 range, indicating neither strongly oversold nor overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $331. The stop loss will be set just below the support at $328 to mitigate potential losses. The initial target price will be the resistance level of $345, aiming for a $14 profit. To refine this strategy, we'll incorporate the Bollinger Bands. If the price approaches the lower band around $299 while the RSI is above 30, we'll hold the position. If the price breaks through the upper band of $388 and the RSI is below 70, we'll consider taking partial profits at $345 and setting a new target at $350. This combined approach leverages both RSI and Bollinger Bands to adapt to changing market conditions, maximizing potential returns while managing risk. The final portfolio will be a combination of the two strategies, with a weighted average of 60% for the RSI strategy and 40% for the Bollinger Bands strategy. Based on the historical data and forecast, STRK shows a slight upward trend, bouncing between support at $0.62 and resistance at $0.874. The RSI consistently remains below 50, indicating a generally oversold condition. The forecast predicts a continued upward trajectory, with prices hovering around $0.648 to $0.67. Considering these factors, I recommend a long position strategy with an entry price of $0.648. To manage risk, set a stop loss at $0.62, just below the established support level. A reasonable target price would be $0.697, aligning with the recent high and anticipating further upward movement. To refine this strategy, let's incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. The center of the Bollinger Bands is trending upwards, further supporting the bullish outlook. Therefore, a long position with an entry at $0.656, a stop loss at $0.62, and a target price of $0.67 would be an optimal portfolio. This strategy combines RSI's oversold signal, the upward trend, and the Bollinger Band's indication of a potential bounce, maximizing the probability of high returns while minimizing risk. Based on the historical data and forecast, Ethereum exhibits a generally upward trend, although with considerable volatility. The price has consistently found support around $1,880, while resistance has fluctuated but peaked near $2,070. The RSI readings have largely remained below the 50 mark, indicating that the asset is not yet significantly overbought. However, the recent readings have been trending upward, suggesting increasing buying pressure. The Bollinger Bands have been expanding, indicating increased volatility, and the price has recently touched the upper band, signaling a potential pullback. Given this information, I recommend a long position strategy with a focus on capitalizing on short-term pullbacks while maintaining an awareness of the overall upward trend. Specifically, I suggest entering a long position at $1,970 on March 26, 2025 Wednesday. The RSI is currently at 32.6, which is in the oversold territory, and the price is near the forecast low. Place a stop-loss order at $1,880, just below the established support level, to mitigate potential losses. The initial target price should be $2,000, aligning with the forecast price and a reasonable profit margin. If the price continues to rise and breaks above $2,000, consider adjusting the target price to $2,070, the previous resistance level. This strategy combines technical indicators and price action analysis to maximize potential returns while minimizing risk. Based on the historical data and forecast, XRP shows a slight upward trend. The RSI consistently remains between 45 and 52, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been fluctuating, but the price has largely remained within their range. Considering the support price of $2.37 and the resistance of $2.87, I propose a moderately bullish strategy. We will implement a strategy based on the forecast price for the next week. The forecast price suggests a stable price around $2.44 to $2.45. My recommended strategy is to enter a long position at $2.44 with a stop-loss order placed at $2.37, just below the support level. This will limit potential losses if the price reverses. The target price will be set at $2.61, aiming for a gain within the recent resistance levels observed in the Bollinger Bands. This strategy combines the forecast data with support and resistance levels, providing a balanced approach to capitalize on the potential upward movement while mitigating risk. This is a high-probability, moderate-risk strategy designed to achieve consistent returns. Based on the historical data and forecast, Binance Coin shows a generally upward trend, consistently bouncing off the support price of $622. The RSI fluctuates between 42 and 57, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Given this, I propose a strategy combining RSI and Bollinger Bands with support and resistance levels. We will initiate a long position when the price touches the support level of $622 and the RSI dips below 40. The entry price will be $622. The stop-loss will be set just below the support at $619 to mitigate potential losses if the price breaks down. The initial target price will be the nearest resistance level at $637. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the support level of $622 and the lower band is also near the support, it confirms a potential buying opportunity. In this case, we will enter a long position at $622 with a stop-loss at $619. If the price reaches the $637 resistance, we will move the stop-loss to the middle of the Bollinger Bands, currently around $602, to secure profits. For a more aggressive approach, if the forecast predicts a rise above $643, we can set a second target at $643. This combined strategy leverages support and resistance, RSI signals, and Bollinger Bands to maximize returns while managing risk. Based on the historical data and forecast, Stellar shows a slight upward trend. The RSI values fluctuate between 37.8 and 52.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been contracting recently, suggesting a period of consolidation. Considering these factors, I propose a strategy combining RSI, Bollinger Bands, and support/resistance levels. We will initiate a long position when the RSI dips below 30 and the price touches the support level of $0.274. The entry price will be $0.274. The stop-loss will be set just below the support level at $0.268 to mitigate potential losses if the price reverses. Our target price will be $0.294, near the recent resistance level and the upper Bollinger Band. To refine this strategy, we'll incorporate the forecast data. The forecast predicts a price range between $0.285 and $0.29. Therefore, we will adjust our target price to $0.29. If the price breaks above $0.29, we will set a trailing stop loss at $0.28. This ensures we secure profits while allowing for further upside potential. This combined strategy leverages the momentum of the RSI, the volatility of the Bollinger Bands, and the key price levels of support and resistance to maximize returns while managing risk. The strategy is designed for a medium risk tolerance and aims for a 5 to 10% return on investment within a week. Based on the historical data and forecast, Doge-Coin exhibits an upward trend, supported by consistently bouncing off the 3.59 support level and approaching the 3.71 resistance. The RSI fluctuates but generally remains above 30, indicating a lack of strong oversold conditions. The Bollinger Bands show the price frequently touching the upper band, suggesting bullish momentum. Considering these factors, I propose a strategy focused on capitalizing on upward movements while managing risk. The forecast for the next week projects continued price increases, further reinforcing a bullish outlook. My recommended strategy is to enter a long position at $3.62. Given the recent price action and the forecast, this entry point offers a favorable risk-reward ratio. Place a stop-loss order at $3.59, just below the established support level, to limit potential losses. The initial target price should be $3.79, aligning with the forecast high and a reasonable profit margin. If the price reaches $3.79, consider moving the stop-loss to break even to protect profits and potentially target $3.87, coinciding with the upper Bollinger Band. This approach combines technical indicators with forecast data to maximize returns while mitigating risk. Based on the historical data and forecast, Cardano shows a slight upward trend with periods of consolidation. The RSI consistently remains between 44.7 and 49.6, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. The forecast predicts a rise in price, with values ranging from $0.744 to $0.755. Considering the support price of $0.701 and the resistance of $0.805, a conservative strategy focusing on breakouts and dips near support is warranted. I recommend a combined strategy utilizing RSI and Bollinger Bands. We will initiate a long position at $0.744, coinciding with the first forecast price and a potential breakout from the recent consolidation. The stop loss will be set just below the support level at $0.701, providing a safety net against significant downturns. The initial target price will be $0.755, aligning with the highest forecast price and a potential test of the upper Bollinger Band. If the price reaches $0.755, we will move the stop loss to break even to protect the initial investment. Further gains can be targeted at the resistance level of $0.805, adjusting the stop loss accordingly as the price moves higher. This strategy balances potential upside with risk management, capitalizing on the predicted upward movement while safeguarding against losses. Based on the historical data and forecast, Litecoin exhibits a slight upward trend, bouncing between support at $91 and resistance at $103. The RSI consistently remains below 50, fluctuating between 32.2 and 44.0, indicating periods of oversold and overbought conditions. The Bollinger Bands show volatility, with the center line trending downwards, suggesting a weakening momentum. Considering the current RSI of 39.4 on March 25, 2025, and the forecast prices, I recommend a long position with an entry price of $92. Place a stop-loss order at $91 to protect against a potential downturn. The target price for this trade is $92.7, aligning with the forecast price on March 28, 2025. To refine this strategy, I'll incorporate the Bollinger Bands. If the price breaks above the upper band, consider taking profits early. Conversely, if the price touches the lower band, it signals a potential reversal, and the stop loss should be adjusted accordingly. This combined RSI and Bollinger Bands approach aims to capitalize on the current upward momentum while mitigating risk through strategic stop-loss placement and profit-taking based on volatility. Based on the historical data and forecast, STRK shows a slight upward trend, bouncing between the support price of $2.26 and the resistance price of $3.06. The RSI consistently remains between 35 and 48, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering these factors, I recommend a moderately bullish strategy. We will implement a combined strategy utilizing RSI and Bollinger Bands. We will enter a long position when the price touches the support level of $2.26, confirmed by an RSI below 37. The stop loss will be set slightly below the support at $2.23 to mitigate potential losses. The initial target price will be the resistance level of $2.42, based on the Bollinger Band Center. For the next week, the forecast indicates a stable price around $2.33 to $2.35. Therefore, if the price reaches $2.35, we will move the stop loss to $2.33 and adjust the target price to $2.46. If the RSI reaches 80, we will take partial profits and move the stop loss to the break-even point. This combined approach balances risk and reward, capitalizing on the current upward trend while incorporating technical indicators for enhanced precision. This strategy aims for high returns while managing risk effectively. Based on the historical data and forecast, Aptus shows an overall upward trend, with recent price fluctuations. The RSI consistently remains below 80, indicating that the asset is not currently overbought. However, it has been approaching 50, suggesting a potential shift in momentum. The Bollinger Bands indicate periods of volatility, with the price frequently touching the upper and lower bands. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands for optimal returns. My strategy involves a long position with an entry price of $5.81. The stop loss will be set at $5.75, just below the lower Bollinger Band, to mitigate potential losses during market dips. The initial target price is $5.94, aligning with the first forecast price and a reasonable profit margin. If the price continues to rise, the second target price will be $5.99. This combined strategy leverages both technical indicators, providing a balanced approach to capitalize on the upward trend while managing risk effectively. Based on the historical data and forecast, SE shows a slight upward trend with periods of consolidation. The RSI consistently stays below 50, indicating a generally neutral to slightly bearish sentiment, but recently trending upward. The Bollinger Bands have been narrowing, suggesting decreasing volatility, and the price has been oscillating within the bands. Considering these factors, I recommend a moderately bullish strategy with defined risk management. We will initiate a long position when the RSI dips below 35 and the price touches the support level of $0.197. The entry price will be $0.197. The stop loss will be set just below the support level at $0.195 to mitigate potential losses. The initial target price will be $0.208, aligning with the recent resistance levels and the upper Bollinger Band. To further refine the strategy, we will implement a trailing stop loss based on the Bollinger Bands. Once the price reaches $0.208, we will move the stop loss to the center of the Bollinger Bands, which is currently around $0.203. If the price continues to rise, we will adjust the stop loss accordingly, always maintaining it at the center of the Bollinger Bands. The second target price will be $0.223, which is the top of the Bollinger Bands. This approach combines RSI-based entry with Bollinger Band-driven risk management and profit-taking, aiming to maximize returns while minimizing potential losses. The final target price will be $0.223. Based on the historical data and forecast, Ethereum Classic shows a slight upward trend. The RSI consistently fluctuates around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the forecast for the next week suggests a potential stabilization around $18. Considering the support price of $17.7 and resistance price of $18.6, I recommend a moderately bullish strategy. I suggest entering a long position at $17.8. Place a stop-loss order at $17.5 to limit potential losses. The initial target price should be $18.4 based on the recent resistance levels. To refine this strategy, I will incorporate the Bollinger Bands. If the price touches the lower band around $16.5, it indicates an oversold condition, which could be a good entry point for a long position. In this case, the stop loss would be placed at $16.3, and the target price would be $18. If the price touches the upper band around $21, it suggests an overbought condition, signaling a potential short-term reversal. However, given the overall upward trend, I will prioritize the long positions. Therefore, the combined strategy favors entering a long position at $17.8 with a stop-loss at $17.5 and a target price of $18.4, adjusting the entry and stop-loss if the price interacts with the lower Bollinger Band. Based on the historical data and forecast, Polygon shows a slight upward trend, consolidating within a range bounded by support at $0.206 and resistance at $0.292. The RSI consistently remains below 50, indicating a generally oversold condition, with dips below 30 frequently occurring. The Bollinger Bands have been widening recently, suggesting increased volatility. I recommend a moderately bullish strategy. We will initiate a long position when the RSI falls below 20. Specifically, enter a long position at $0.207. Place a stop-loss order at $0.195 to limit potential losses. Set a target price at $0.235, aiming to capitalize on the anticipated upward movement and the middle Bollinger Band. To refine this strategy, we will incorporate Bollinger Bands analysis. When the price touches the lower Bollinger Band and the RSI is below 20, it confirms a strong buying opportunity. We will enter a long position at $0.217 on March 26, 2025. Place a stop-loss order at $0.206, just above the support level. Set a target price at $0.226, aligning with the forecast and the upper Bollinger Band. This combined RSI and Bollinger Bands approach aims to maximize returns while managing risk effectively. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, AEVO shows a slight upward trend, although it has been fluctuating within a range. The RSI consistently remains below 80, indicating the asset is not currently overbought. However, the recent RSI values are approaching 50, suggesting increasing momentum. The Bollinger Bands show periods of volatility, with the price occasionally touching the lower band, indicating potential oversold conditions. Considering these factors, I recommend a moderately bullish strategy. My strategy involves a long position with an entry price of $0.125. The stop-loss should be set just below the support level at $0.124 to protect against unexpected downturns. The initial target price is $0.13, aiming for a modest profit. If the price breaks above $0.13 and the RSI moves above 50, I will adjust the target price to $0.135. This strategy combines the bullish trend, RSI signals, and Bollinger Bands analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, optimism shows a slight upward trend with periods of consolidation. The RSI consistently remains within the 37 to 47 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been fluctuating, with the price occasionally touching the lower band, suggesting potential buying opportunities. Considering the forecast for the next week, the price is expected to hover around $0.88 to $0.89. Therefore, I propose a moderately bullish strategy focusing on short-term gains. My recommended strategy is to enter a long position at $0.88. Given the current RSI and Bollinger Bands, a stop-loss should be placed at $0.849, just below the support price, to protect against a potential downturn. The initial target price will be $0.895, a conservative increase based on the forecast and resistance level. If the price continues to rise and breaks above $0.895, consider adjusting the target price to $0.905. This strategy aims to capitalize on the anticipated upward movement while mitigating risk with a well-defined stop loss. Based on the historical data and forecast, STRKnet exhibits a sideways trend with support at $0.175 and resistance at $0.187. The RSI consistently hovers around the 40 level, indicating neither strong overbought nor oversold conditions. However, the most recent RSI values are approaching the oversold level of 20, suggesting a potential short-term pullback. Considering the forecast, the price is expected to remain relatively stable around $0.172 to $0.176. I recommend a cautious long position strategy. We will enter a long position at $0.172, placing a stop-loss order at $0.168 to limit potential losses. The initial target price will be $0.177, aiming to capture a small profit from the anticipated sideways movement. To refine the strategy, we will incorporate the Bollinger Bands. The price is currently near the bottom band, which can act as dynamic support. If the price bounces off the bottom band and shows signs of reversing, we can adjust the target price to $0.181. Conversely, if the price breaks below the bottom band and the RSI confirms an oversold condition, we should exit the position to avoid further losses. This adaptive approach, combining RSI and Bollinger Bands, will allow us to maximize potential returns while effectively managing risk in this sideways market. Based on the historical data and forecast, Solana shows a mixed trend with periods of consolidation and upward movement. The RSI consistently indicates oversold conditions, hovering below 40 for most of the observed period, suggesting a potential for a rebound. The Bollinger Bands have been widening, indicating increased volatility, and the price has recently approached the lower band, further reinforcing the oversold signal. Considering the forecast for the next week, which predicts a gradual increase in price, I recommend a long position strategy. Specifically, I suggest entering a long position at $132. The initial stop loss should be set at $126 to protect against a potential downside reversal. Given the resistance level at $176 and the forecasted upward trend, a reasonable target price would be $141, providing a healthy profit margin. This strategy combines the oversold RSI signal with the Bollinger Bands indication of potential price recovery and the forecast of increasing prices, aiming for a high return investment while managing risk effectively. Based on the historical data and forecast, Jupiter shows a fluctuating trend, but the recent price action suggests a potential upward momentum. The RSI consistently hovers around the oversold territory, below 40, indicating that the asset may be undervalued. Considering the forecast prices, we anticipate a gradual increase in the coming week. Therefore, I recommend a long position strategy. We will enter a long position at $0.519, placing a stop-loss order at $0.468, just below the lower Bollinger Band to mitigate potential losses if the price declines. The initial target price will be $0.535, aligning with the recent resistance level and the upper Bollinger Band. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI crosses above 50 during the forecast period, we will consider raising the target price to $0.545. Conversely, if the price touches the support level of $0.547, we will reassess the position and potentially adjust the stop loss to $0.523. This dynamic approach, combining technical indicators and price action, aims to maximize returns while managing risk effectively. The portfolio will prioritize this long position, allocating 60% of the capital, with the remaining 40% held in reserve for potential adjustments or alternative opportunities. Based on the historical data and forecast, Render shows a clear upward trend. The price has consistently tested and bounced off the support level of $3.45, while approaching the resistance level of $4.14. The RSI indicates that the asset is currently approaching overbought territory, fluctuating between 55 and 60. Considering the forecast, the price is expected to continue its upward trajectory, reaching $4.09 by April 1, 2025. Therefore, I recommend a long position strategy. Entry price should be $3.61, with a stop loss set at $3.45 to protect against a potential pullback. The initial target price should be $3.88, coinciding with the upper Bollinger Band. To maximize potential returns, we will implement a dynamic strategy. Once the price reaches $3.88, we will move the stop loss to the break-even level, $3.61. If the price continues to rise, we will set a second target price at $3.95, capitalizing on the momentum. Finally, if the price reaches $4.09, we will close the position, securing a significant profit. This strategy combines RSI, Bollinger Bands, and support/resistance levels to identify optimal entry, exit, and risk management points, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Solana name service shows a slight upward trend with price fluctuations around the $0.11 support level. The RSI consistently hovers between 39.8 and 48.0, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the forecast prices, which remain relatively stable around $0.113 to $0.115, I recommend a cautious bullish strategy. Specifically, we will enter a long position when the price touches the support level of $0.11, placing a stop-loss order at $0.103 to mitigate potential losses. The initial target price will be $0.118, aligning with the center of the Bollinger Bands, offering a reasonable profit margin. To refine this strategy, we will incorporate the RSI indicator. If the RSI falls below 20, indicating an oversold condition, we will enter a long position at $0.105, with a stop loss at $0.10 and a target price of $0.118. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will consider a short position. However, given the overall upward trend and stable forecast, we will prioritize the long positions. Therefore, the portfolio will consist of 70% long positions based on the support level and 30% based on the RSI indicator, aiming for high returns with controlled risk. Based on the historical data and forecast, Doge-Coin shows a generally upward trend, though with volatility. The RSI consistently fluctuates, but recent values have climbed above 30, indicating a move away from oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility and potential for price swings. Given the current trend and the forecast predicting prices between 0.174 and 0.182, I recommend a long position strategy. We will implement a combined strategy utilizing RSI and Bollinger Bands for optimal risk management. I propose entering a long position at $0.174. The stop loss should be set just below the recent support level at $0.167 to protect against unexpected downturns. Our initial target price will be $0.182, aligning with the forecast high for the week. If the price breaks through $0.182 and the RSI approaches 80, we can consider raising the target price to $0.191. The RSI strategy will be used to confirm the trend, while the Bollinger Bands will help manage volatility. This combined approach aims to capitalize on the upward trend while mitigating potential losses. Based on the historical data and forecast, PEPE shows a slight upward trend with price fluctuations. The RSI consistently remains above 39.6, indicating that the asset is not significantly oversold. The Bollinger Bands are widening slightly, suggesting increasing volatility. Considering the support price of $0.00000660 and the resistance price of $0.00000910, and the forecast price rising to $0.00000820, a long position is warranted. I suggest entering a long position at $0.00000770. To manage risk, set a stop loss at $0.00000660, just below the support level. For the target price, aiming for the resistance level of $0.00000910 offers a reasonable profit potential. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 30, indicating an oversold condition, we can enter a long position. Conversely, if the RSI reaches 80 or higher, suggesting an overbought condition, we should consider exiting the long position or shorting. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. If the price breaks above the upper Bollinger Band, it suggests a potential selling opportunity. Combining these indicators, I suggest an initial long position at $0.00000770 with a stop loss at $0.00000660 and a target price of $0.00000910. We will reevaluate the position based on RSI and Bollinger Band signals during the forecast period. Based on the historical data and forecast, SHIB Inu shows a slight upward trend, consistently trading near the support level of $0.000125 and occasionally touching the resistance level of $0.000150. The RSI fluctuates between 37.9 and 54.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering these factors, I propose a strategy that combines RSI and Bollinger Band signals. We will implement a long position when the RSI dips below 30 and the price touches the support level of $0.000125, confirming an oversold condition. Specifically, we will enter a long position at $0.000125. The stop loss will be set just below the bottom Bollinger Band, at $0.000115, to protect against unexpected downside movements. The initial target price will be the resistance level of $0.00000150, aiming for a significant gain. If the price reaches this target, we will consider a trailing stop loss, adjusting it based on the Bollinger Bands to capture further potential upside. The forecast data suggests a continued upward trend, with prices expected to reach $0.000141 by April 1, 2025. Therefore, a secondary target price can be set at $0.000140, balancing risk and reward. This strategy leverages both technical indicators and price action to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dog with Hat shows a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands provide valuable insights. The price has recently been testing the lower band, suggesting a potential bounce. The forecast for the next week indicates a gradual increase, with prices ranging from $0.516 to $0.539. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position on March 26, 2025, when the price opens at $0.516. The stop loss will be set just below the lower Bollinger Band at $0.426, providing a buffer against potential downside risks. The initial target price will be $0.539, aligning with the forecast high for the week. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will hold the position and wait for a rebound. Conversely, if the RSI exceeds 80, signaling an overbought condition, we will consider taking profits early. The portfolio will be 60% based on the Bollinger Band strategy, 30% based on the RSI strategy, and 10% based on the support and resistance levels. This blended approach aims to capitalize on both momentum and range-bound opportunities, maximizing potential returns while managing risk effectively. The final target price will be $0.539 plus $10. Based on the historical data and forecast, Doge-Coin shows a slight upward trend. The price has been fluctuating within a range, but the forecast indicates continued upward momentum. The RSI consistently remains below 54, suggesting the asset is not currently overbought. The Bollinger Bands have been widening, indicating increased volatility, but the price is consistently near the middle band. Combining these factors, I recommend a long position strategy. We will enter a long position at $0.00252. Given the support level at $0.00245, our stop loss will be set at $0.0024 to limit potential losses. Our target price will be $0.00279, aiming for a reasonable profit within the current upward trend. To enhance this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we will consider adding to our position at $0.0018. Conversely, if the RSI reaches 80 or higher, suggesting an overbought condition, we will consider taking partial profits at $0.0027. The Bollinger Bands will act as dynamic support and resistance. If the price touches the lower band, it might signal a buying opportunity. If the price touches the upper band, it might indicate a potential profit-taking point. This combined strategy provides a robust approach to capitalize on the current upward trend while mitigating risks through dynamic adjustments based on RSI and Bollinger Band signals. Based on the historical data and forecast, NEAR protocol shows a generally upward trend with some volatility. The RSI fluctuates between 38 and 56, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been expanding and contracting, suggesting increasing and decreasing volatility. Considering the forecast prices, which are consistently above the recent closing prices, I propose a strategy focused on capitalizing on potential upward movements while managing risk. We will implement a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels to maximize efficiency. The primary strategy will be a long position with an entry price of $2.82. The stop loss will be set at $2.74, just below the bottom of the Bollinger Bands, to protect against unexpected downturns. The initial target price will be $2.98, aligning with the forecast price and the upper Bollinger Band. If the price reaches $2.98, we will move the stop loss to break even, $2.82, to secure profits and potentially allow for further gains. The final target price will be $3.01, coinciding with the support level, offering a conservative profit-taking point. This combined approach leverages technical indicators and price levels for a balanced and potentially high-return investment. Based on the historical data and forecast, Internet Computer exhibits an upward trend, supported by consistently breaching the center of the Bollinger Bands and the RSI values trending upward, although fluctuating. The forecast for the next week indicates a continued upward trajectory. Therefore, I recommend a long position strategy. We will use a combined approach leveraging RSI and Bollinger Bands. Initially, on March 26, 2025, with the open price around $5.96, we will enter a long position. The stop loss will be set at $5.67, just below the established support level, to protect against a potential downside reversal. The first target price will be $6.24, aligning with the forecast price for April 1, 2025. To refine the strategy, we'll incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, we will consider accumulating more positions at around $5.8. If the RSI reaches 80, signaling an overbought scenario, we will consider taking partial profits at $6.4. We will adjust the position size based on the volatility indicated by the Bollinger Bands. If the price approaches the upper band, we will reduce our exposure to mitigate risk. This dynamic approach, combining trend analysis, RSI signals, and Bollinger Band volatility assessment, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Injective shows a slight upward trend, with the forecast prices consistently above the recent closing prices. The RSI consistently remains below 80, indicating that the asset is not currently overbought. However, it has been fluctuating around the 40 level, suggesting potential for upward movement. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the lower band. Given these observations, I recommend a long position strategy with a focus on capitalizing on potential upward momentum. My proposed strategy involves entering a long position at $9.89. The stop loss should be placed at $9.65 to mitigate potential losses if the price declines. The initial target price is $10.3, aligning with the support level and providing a modest profit. If the price breaks through $10.3 and continues to rise, a second target price of $13, the resistance level, can be considered. This strategy combines RSI and Bollinger Band signals, aiming for a balance between risk management and profit potential. Based on the historical data and forecast, BTC shows a slight upward trend with periods of volatility. The RSI consistently remains below 50, indicating a generally neutral to slightly bearish sentiment. However, the recent RSI values are approaching 47, suggesting a potential shift. Considering the support price of $247 and the resistance price of $321, and the Bollinger Bands, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support level of $247. The stop loss will be set slightly below the support at $245 to protect against a potential breakdown. The initial target price will be the resistance level of $321, aiming for a substantial profit. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the support level of $247 and the lower band is below $200, we will enter a long position. The stop loss will remain at $245. The first target price will be the middle band, around $256, and the second target price will be the upper band, around $285. This layered target approach allows us to secure profits incrementally while potentially capturing further gains. If the price fails to reach the first target of $256 within a week, we will exit the position, minimizing losses. This combined RSI and Bollinger Bands approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, THETA network shows a slight upward trend with periods of volatility. The RSI consistently remains below 50, indicating a generally weak momentum. The Bollinger Bands suggest that the price has been fluctuating within a range, with the lower band frequently tested. Given these factors, I propose a moderately bullish strategy with a focus on capitalizing on short-term upward movements while managing risk. We will enter a long position at $0.93, coinciding with the initial forecast price and a slight bounce from recent lows. A stop loss will be set at $0.864, just below the established support level, to protect against significant downside risk. The target price will be $0.991, aiming to capture a reasonable profit within the current resistance range. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, we'll consider a long entry. Conversely, when the price touches the lower Bollinger Band, it could signal a potential buying opportunity. If the price reaches the upper Bollinger Band, we'll consider taking profits or tightening our stop loss. Combining these signals, we can adjust our entry and exit points dynamically. For example, if the RSI is at 28 and the price is near the lower Bollinger Band of $0.737, a long entry at $0.737 with a stop loss at $0.70 and a target price of $0.8 would be considered. This layered approach, blending trend analysis, RSI, and Bollinger Bands, should generate high returns while mitigating risk. Based on the historical data and forecast, WorldCoin exhibits volatility with periods of both upward and downward trends. The RSI consistently fluctuates between 34.7 and 49.3, indicating a mixed sentiment. The Bollinger Bands show that the price has been oscillating within a relatively narrow range, but the recent forecast suggests a potential upward trend. Considering these factors, I propose a strategy focused on capitalizing on short-term upward movements while mitigating risk. We will employ a combination of RSI and Bollinger Band signals to optimize our entry and exit points. The strategy involves a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. Given the recent forecast and the current RSI of 49.3 on March 25, 2025, we will wait for a pullback. If the price falls to $0.818 and the RSI drops below 30, enter a long position at $0.818. Place a stop-loss order at $0.755, just below the lower Bollinger Band to protect against unexpected downside. Set a target price at $0.901, aligning with the forecast for April 1, 2025. This strategy aims to capture a potential 83 cents profit while minimizing risk through a well-defined stop-loss level. This approach balances the potential for high returns with prudent risk management. Based on the historical data and forecast, Hooked Protocol shows a slight upward trend with periods of consolidation. The RSI consistently remains below 50, indicating a generally weak momentum, but has been approaching the 50 level. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility followed by a potential breakout. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the RSI crosses above 30, aiming to capitalize on the potential upward movement. The entry price will be $0.148, with a stop-loss set at $0.136, coinciding with the established support level. The initial target price will be $0.152, aligning with the forecast price for the week. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, $0.165, it signals a strong bullish momentum, prompting us to adjust the target price to $0.176, the resistance level. Conversely, if the price falls below the lower Bollinger Band, $0.125, we will immediately trigger the stop-loss at $0.136. This layered approach, combining RSI signals with Bollinger Band confirmation, aims to maximize potential returns while minimizing risk. The portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% support and resistance strategy. Based on the historical data and forecast, Artificial Superintelligence Alliance exhibits a fluctuating trend with recent upward momentum. The RSI consistently remains below the overbought level of 80, indicating there's room for further price appreciation. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Considering the support price of $0.505 and the forecast prices, I recommend a long position with an entry price of $0.522. Set a stop-loss at $0.505, just below the support level, to protect against potential downside risks. A target price of $0.542 is set, aligning with the forecast price and providing a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper band, we'll consider taking partial profits and adjusting the target price. Conversely, if the price approaches the lower band again, we'll reevaluate the RSI and consider tightening the stop-loss. This dynamic approach allows us to adapt to changing market conditions and maximize returns. The overall portfolio will prioritize this long position, allocating 60% of capital, with the remaining 40% held in reserve for potential opportunities or hedging strategies. Based on the historical data and forecast, Polkadot shows a clear upward trend. The price has consistently been above the lower Bollinger Band, indicating bullish momentum. The RSI has been fluctuating but generally trending upwards, currently around 54.0, suggesting strengthening positive momentum. Considering the support price of $4.41 and the forecast prices, I recommend a long position. The entry price should be $4.52, coinciding with the first forecast price. A stop-loss should be placed just below the support level at $4.38 to protect against unexpected downturns. The initial target price is $4.61, aligning with the forecast price on March 29, 2025. To further maximize returns, we'll implement a dynamic target strategy. Once the price reaches $4.61, we'll move the stop-loss to break even at $4.52. If the price continues to rise, the next target is $4.62, based on the forecast. If the price hits $4.62, we'll move the stop-loss to $4.56. This strategy combines the forecast data with technical indicators to capitalize on the upward trend while managing risk effectively. This portfolio is the most efficient because it combines the three strategies. Based on the historical data and forecast, Filecoin shows a slight upward trend. The price has consistently bounced off the support level of $2.92, and the forecast predicts a continued increase, reaching $3.13 on March 31, 2025. The RSI indicates that the asset is currently within a neutral range, fluctuating between 37.8 and 52.0. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Therefore, I recommend a long position with an entry price of $3.05, a stop-loss price of $2.92, just below the support level, and a target price of $3.13, based on the forecast. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI dips below 20, oversold, it's a strong signal to enter a long position. Conversely, when the RSI exceeds 80, overbought, it's a signal to exit or consider a short position. The Bollinger Bands can help confirm these signals. If the price touches the lower band and the RSI is near 20, it strengthens the case for a long entry. If the price touches the upper band and the RSI is near 80, it strengthens the case for an exit. Combining these indicators, I would enter a long position at $3.05, set a stop-loss at $2.92, and target $3.13, adjusting the stop-loss as the price moves higher to protect profits. Based on the historical data and forecast, Conflux shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates between 32.7 and 49.9, indicating neither strong overbought nor oversold conditions for an extended period. However, the recent RSI values are approaching the 50 level, suggesting a potential weakening of the upward momentum. The Bollinger Bands have been narrowing recently, indicating a period of low volatility, which is likely to be followed by a breakout. Considering the support price of $0.0911 and the forecast prices, I recommend a long position strategy. The entry price for this long position should be $0.089, coinciding with the start of the forecast period and a relatively low RSI value. The stop loss should be set at $0.0878, slightly below the lower Bollinger Band, to protect against unexpected downside movements. The target price should be $0.0948, aligning with the highest price in the historical data and the forecast price of $0.093. This strategy combines RSI and Bollinger Bands analysis to capitalize on the anticipated upward trend while managing risk effectively. The potential return on this trade is significant, given the relatively small risk exposure. Based on the historical data and forecast, Ethereum name service shows a fluctuating trend with a recent upward bias. The RSI consistently remained below 50, indicating a potential for further upside. The Bollinger Bands have been narrowing, suggesting a period of consolidation before a potential breakout. Considering these factors, I recommend a long position with an entry price of $16.8. A stop loss should be placed at $16.5 to protect against a potential downside reversal. The initial target price is set at $17, aiming to capitalize on the short-term upward momentum. To refine the strategy, I'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, we'll consider entering a long position. Conversely, when the price touches the lower Bollinger Band, it also signals a potential buying opportunity. For the forecast period, with the price predicted to hover around $16.6 to $16.8, a conservative target price of $17 remains reasonable. The stop loss will remain at $16.5 to mitigate risk. This combined approach, integrating trend analysis, RSI, and Bollinger Bands, should yield high returns while managing risk effectively. Based on the historical data and forecast, Avalanche shows a clear upward trend with support at $19.8 and resistance at $24.4. The RSI is currently trending upwards, fluctuating between 40 and 60, indicating strengthening momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy focused on capitalizing on the anticipated upward trend. We will implement a tiered entry strategy. Initially, enter a long position at $21. The stop loss should be set just below the support level at $19.8 to protect against potential downside risks. The first target price is set at $22.7, coinciding with the forecast price and a reasonable profit margin. If the price reaches $22.7, we will move the stop loss to the entry price of $21 to secure profits. A second target price is set at $23.4, aligning with the final forecast price. If the price reaches $23.4, we will close the position, securing a substantial profit. This strategy combines technical indicators and forecast data to maximize returns while managing risk effectively. Based on the historical data and forecast, Doge-Coin shows an overall upward trend, with price fluctuations within a defined range. The RSI consistently hovers around the middle range, indicating neither strong overbought nor oversold conditions. However, the recent upward movement and the forecast prices suggest a potential for further gains. Considering the support price of $0.0251 and the resistance price of $0.0321, I recommend a long position strategy. We will enter a long position at $0.0261, placing a stop-loss order at $0.0251 to limit potential losses. The initial target price will be set at $0.0321, aligning with the resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the middle band, suggesting a potential breakout. If the price breaks above the upper Bollinger Band, around $0.0307, we will adjust the target price to $0.0350. Conversely, if the price falls below the lower Bollinger Band, around $0.0218, we will exit the position and reevaluate. This combined strategy, utilizing both RSI and Bollinger Bands, offers a balanced approach to capitalize on the upward trend while mitigating risk. The portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% support and resistance strategy. Based on the historical data and forecast, PENDLE shows a clear upward trend, breaking through the resistance level of $2.51 and reaching $2.94. The RSI consistently fluctuates above 30, indicating that the asset is not significantly oversold. The forecast for the next week projects a continued upward trajectory, with prices ranging from $2.6 to $2.89. Considering this, I recommend a long position strategy. We will enter a long position at $2.6, placing a stop-loss order at $2.51 to limit potential losses. The initial target price will be $2.89, aiming to capitalize on the predicted upward movement. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades within the bands, suggesting moderate volatility. If the price touches the lower band, which is around $1.7, it could be a potential entry point, but given the overall trend, we'll stick with the initial entry. If the price breaks above the upper band, which was $2.97, it signals strong momentum, and we can adjust the target price to $3.69, the resistance level. This combined strategy provides a balanced approach, leveraging both RSI and Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, the sandbox shows a slight upward trend. The RSI consistently fluctuates between 36.7 and 51.5, indicating periods of oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the support price of $0.298 and the forecast price is slightly above $0.294, a strategy focusing on short-term gains within a defined range is advisable. I recommend a long position entry at $0.294. A stop loss should be placed just below the support level at $0.288 to mitigate potential losses. The target price should be set at $0.309, aligning with the forecast for the week. To enhance returns, we'll integrate the RSI and Bollinger Bands. If the RSI drops below 30 near $0.294, it signals an oversold condition, reinforcing the long entry. Conversely, if the price touches the lower Bollinger Band around $0.26, it also suggests an oversold condition and a potential entry point. If the price reaches the upper Bollinger Band around $0.365, it indicates an overbought condition, signaling a potential exit or a short position. This integrated strategy offers a dynamic approach to capitalize on short-term price movements while managing risk effectively. Based on the historical data and forecast, Decentraland shows a slight upward trend with periods of consolidation. The RSI fluctuates between 38.2 and 50.2, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, suggesting moderate volatility. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the RSI dips below 40, targeting the resistance level of $0.309. Specifically, we will enter a long position at $0.277. The stop loss will be set just below the support level at $0.262 to mitigate potential losses. The initial target price will be $0.291, near the upper Bollinger Band. To refine the strategy, we can incorporate the forecast data. The forecast suggests a gradual increase in price, peaking at $0.286. If the price reaches $0.282, we will move the stop loss to the entry price of $0.277 to secure profits. If the price reaches the initial target of $0.291, we will adjust the target price to the resistance level of $0.309. This combined approach, utilizing both historical data and forecast, should provide a balanced and high-return investment strategy for Decentraland. Based on the historical data and forecast, ENG coin shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates, but remains mostly below the 50 mark, indicating a lack of strong bullish momentum. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a bounce. The support price is stable at $0.0892, while the resistance is significantly higher at $0.116. Considering these factors, I recommend a long position with a focus on capitalizing on potential rebounds. Specifically, I suggest entering a long position at $0.0957 on March 26, 2025. Given the RSI is relatively low and the price is near the lower Bollinger Band, this is a favorable entry point. Set a stop loss at $0.0892, just below the established support level, to mitigate potential losses if the price declines further. For the target price, aim for $0.0996, aligning with the forecast for April 1, 2025, and providing a reasonable profit margin. This strategy combines the signals from the RSI and Bollinger Bands, while anchoring the trade with the defined support and resistance levels. Based on the historical data and forecast, Uniswap shows a fluctuating trend with a recent upward bias. The RSI consistently remains below 80, indicating that the asset is not overbought. However, it frequently dips below 30, suggesting oversold conditions. The Bollinger Bands have been contracting recently, indicating a period of consolidation before a potential breakout. Considering these factors, a combined strategy utilizing RSI and Bollinger Bands is recommended. We will initiate a long position when the RSI falls below 20 and the price touches the lower Bollinger Band. The entry price will be $6.50. A stop-loss order will be placed just below the support level at $6.50, setting it at $6.40. The initial target price will be set at $6.70, aligning with the recent resistance level. To maximize potential returns, we'll implement a trailing stop-loss strategy. Once the price reaches $6.70, we'll move the stop-loss to $6.60. If the price continues to rise, we'll adjust the stop-loss accordingly, ensuring we protect profits while allowing for further upside. If the RSI reaches 80 or the price hits the upper Bollinger Band, we'll consider taking partial profits or exiting the position entirely. The forecast data suggests a stable price around $6.50 for the next week, providing a favorable entry point. This combined strategy balances risk and reward, capitalizing on potential upward momentum while mitigating downside risk with strategic stop-loss placement and profit-taking techniques. Based on the historical data and forecast, Chainlink demonstrates an upward trend with consistent price increases. The RSI values fluctuate between 36.6 and 52.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been trending upwards, nearing the upper band. Considering the forecast data, the price is expected to continue its upward trajectory, reaching $15.2 by April 1, 2025. Therefore, I recommend a long position strategy. I suggest entering a long position at $14.7. The stop loss should be set at $13.4, just below the support level, to mitigate potential losses. The initial target price is $15, aligning with the forecast for March 28, 2025. If the price reaches $15, consider moving the stop loss to the entry price of $14.7 to protect profits. A secondary target price of $15.2, based on the forecast for April 1, 2025, should be considered if the first target is achieved. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Aave shows a slight upward trend with recent price fluctuations. The RSI consistently remains below 50, indicating a generally oversold condition, with values ranging from 33.4 to 48.7. The Bollinger Bands have been widening, suggesting increased volatility. The forecast price for the next week indicates a stable range around $172 to $177, with a potential for slight downward pressure. Given the current oversold RSI and the support price of $164, I recommend a long position. We will enter a long position at $173 with a stop loss set at $164, just below the support level to mitigate potential losses. The initial target price will be $186, aligning with the recent resistance level and the center of the Bollinger Bands. To refine this strategy, we will incorporate a dynamic target price based on the Bollinger Bands. If the price reaches $186, we will move the stop loss to the recent low of $172, securing some profit and limiting downside risk. If the price continues to rise and touches the upper Bollinger Band, which is currently around $202, we will set a final target price of $190, maximizing potential gains. This adaptive approach combines the RSI's oversold signal with the Bollinger Band's volatility indicators to create a robust and potentially high-return investment strategy for Aave. Based on the historical data and forecast, EOS shows a slight upward trend with periods of volatility. The RSI consistently fluctuates around the 40 to 55 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased price volatility. Considering these factors, I propose a strategy focused on capitalizing on short-term pullbacks while respecting the support level of $0.55. We will initiate a long position when the RSI dips below 35, aiming to capture a bounce back towards the $0.57 resistance level. Specifically, I recommend entering a long position at $0.554 when the RSI falls below 35. The stop loss should be set at $0.53, just below the lower Bollinger Band, to mitigate potential losses if the price continues to decline. The target price is $0.57, aligning with the recent resistance level. This strategy aims for a conservative 1.6% profit while limiting risk to 4.5%. This approach combines the RSI's oversold signal with the Bollinger Band's volatility assessment to optimize entry and exit points, maximizing potential returns within a defined risk tolerance. Based on the historical data and forecast, Tron shows a slight upward trend. The RSI consistently remains below 80, indicating that the asset is not currently overbought. However, it has dipped below 35 in the past, suggesting potential oversold conditions. The Bollinger Bands have been narrowing recently, which could indicate a period of consolidation followed by a breakout. Given the current RSI of 46.5 and the forecast prices hovering around 0.223 to 0.228, I recommend a moderately bullish strategy. We will enter a long position at $0.223 plus $, with a stop loss set just below the lower Bollinger Band at $0.213 plus $. The initial target price will be $0.23 plus $, aligning with the recent resistance level. To refine this strategy, we will incorporate an RSI-based exit condition. If the price reaches $0.23+ and the RSI surpasses 70, we will take partial profits and adjust the stop loss to break even. For the remaining position, we will set a secondary target price at $0.237+, coinciding with a previous resistance level. This multi-stage approach allows us to capitalize on the potential upward momentum while mitigating risk through strategic stop-loss adjustments and profit-taking based on RSI signals. This portfolio combines Bollinger Bands and RSI for efficient returns. Based on the historical data and forecast, Suncoin shows a slight upward trend, with support consistently around $0.0163 and resistance near $0.0183. The RSI indicates oversold conditions recently, fluctuating between 30.5 and 58.0, currently sitting at 44.6. The Bollinger Bands show that the price has been trading within the bands, with the lower band consistently around $0.0152 and the upper band around $0.0183. Given this information, I recommend a long position strategy. Entry price should be $0.0162, with a stop loss set at $0.0159 to protect against potential downside. The initial target price is $0.0175, aiming for a moderate profit. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI dips below 30, consider entering a long position. As the price approaches the upper Bollinger Band, consider taking profit or adjusting the stop loss to ensure profit. For example, if the price reaches $0.0175, move the stop loss to $0.0168. If the forecast price continues to decrease to $0.016, exit the position and wait for a better entry point. This dynamic approach allows us to capitalize on the upward trend while mitigating risk and maximizing potential returns.